Welcome to the Daily Block, the top events happening in the past day in crypto and why they matter. Most coordinated crash ever. $19 billion plus liquidations, alleged manipulation. Friday's sell-off vaporized roughly $19 billion plus in leveraged positions as Bitcoin briefly plunged into the low six-figure range. Multiple analysts and on-chain sleuths flagged the move as looking orchestrated, with Trump's tariff shock used as macro cover while targeted dumps and D-pegs, think USDE, WBETH, BN and Sol, on centralized venues reportedly forced cascading liquidations across exchanges. The result was a knife fight in order books where price discovery stopped and cascading margin calls did the rest. Why it matters for traders. If this was a coordinated manipulation, exploiting exchange mechanics and oracle weaknesses, those attack vectors are an immediate systemic risk for anyone using leverage or holding fragile altcoins. Risk note, proving malice is hard, and markets also amplify stress naturally, so some of this could be classic liquidity. Vacuum meets crowded leverage. Next up, Binance report. Systems largely held up. $283 million in user compensation. Binance put out a post-mortem saying core trading systems stayed intact during the carnage, admitting brief internal disruptions and a handful of de-pegging events while blaming market-wide forced liquidations, dormant limit orders, and UI decimal bugs for some zero-price visual anomalies. The exchange confirmed 2 rounds of reimbursements, totaling about $283 million to affected users, which apparently calmed some of the pitchfork crowd. Binance's PR paints a patchwork failure of market plumbing rather than a platform meltdown. They want to move past this fast. Why it matters for traders. Fast compensation and transparency. Reduced tail risk from exchange insolvency, but execution risk and UI data oddities remain during extreme volatility. Counterpoint. Compensation soothes users but does not automatically fix the underlying oracle or matching engine quirks that allowed the chaos. Moving on, centralized exchanges under fire for opaque liquidation reporting. Founder types like the Hyperliquid Head called out that many CX-Cap reported liquidations to roughly 1 order per second in public feeds, which can drastically understate actual blowout volumes during flash events. That means CoinGlass and other public dashboards could be showing numbers that are pleasant lies relative to what actually ripped through matching engines in milliseconds. If the public feed is a sanitized stream, our sense of timeline and scale is compromised, and social narratives get rewritten in favor of smaller, neater numbers. Why it matters for traders. Unreliable liquidation stats wreck risk models and sentiment gauges, so treat reported totals as lower bounds and size leverage conservatively. Risk note, exchanges argue caps prevent feed overload and abuse, but that design choice hides tail consumption. Now for the rebound. Market bounce plus big flows, $3.17 billion into digital asset products. After the carnage, Bitcoin coin staged a healthy bounce from around 102,000 back toward 114 to 118,000. While digital asset fund flows registered about $3.17 billion for the week, with Bitcoin leading at roughly $2.67 billion. On-chain measures showed open interest down about $12 billion. And stablecoin liquidity parked on the sidelines, classic washout. Then reaccumulation behavior with institutions nibbling on the dip. That decompression of leverage reduces the tinder for the next flash crash and signals some buyers remain committed. Why it matters for traders. Massive deleveraging can clean house and set up a more sustainable upleg, and ETF/ETP inflows are a concrete bid to monitor as leverage rebuilds. Caveat: flows can reverse, and short-term momentum still favors whoever rebuilds leverage fastest. Switching gears, BNB hits new all-time highs above $1,300. Memecoin season heats up. BNB ripped past $1,300 as on-chain usage on BNB chain and LP BNB surged. Transaction counts hit records, and meme coin activity lit up like a casino marquee, where a lot of traders reported quick wins. Ecosystem metrics, TVL, active users, DEX volumes, plus some corporate treasuries allocating BNB added a fundamental sheen to what could otherwise be pure hype. The hotter BNB gets, the more capital chases meme coin velocity on that chain, and that creates both fast gains and an easy path to quick liquidations. Why it matters for traders. BNB leadership accelerates meme coin, and momentum trades on that chain, so expect higher velocity and bigger gamma risk. Risk note, meme coins are crowded, low liquidity, and prime candidates for explosive blowups and rug-like behavior. Next, Zcash parabolic rally, roughly 520% month to date, extreme overbought. ZEC exploded about 520% MTD, probing near its prior 2021 highs in the $300 area, while spiking weekly RSI above 90 and stacking long clusters around $244 to $245. The chart shows a bull flag vibe, but the technicals scream overheated, and the position concentration leaves a massive long liquidation cliff under the market. A kind of parabolic tape can give short-term riches and equally swift pain if liquidity disappears. Why it matters for traders: microcaps and privacy tokens can hand out giant short-term returns, but concentrated longs plus thin liquidity means snapbacks and liquidation cascades are high probability. Risk note: chasing the parabolic move without clear volume support is playing with gasoline and a match. On the policy front, Texas lawmaker hints ETH could join the state crypto reserve. Texas's Bitcoin reserve law includes a clause that allows adding other digital assets if they meet a 24-month average market cap threshold of about $500 billion. And Senator Schwertner floated interest in adding Ethereum if it meets the requirement. The comptroller's office is still figuring out custody mechanics and operational details, so this is more signal than immediate execution, but it puts a new kind of institutional demand on the table. Why it matters for traders: any credible state or sovereign demand for ETH or other crypto is bullish for long-term flows and adoption narratives and could become a tailwind for price discovery. Caveat: legislative signal does not equal buying power until custodial frameworks and budgets are finalized. Finally, Singapore court sanctions WazirX restructuring, platform to resume in about 10 business days. A Singapore court approved a creditor-backed restructuring for WazirX after its $230 to $235 million hack in 2024, with management saying operations will restart roughly 10 business days after the scheme is effective, and token distributions to creditors will follow. BitGo custody ties and judicial oversight are built into the recovery plan, which could become a template for court-supervised exchange recoveries going forward. Why it matters for traders: an orderly comeback with sanctioned token return sets a precedent for recoveries. It could flood local markets with unlocked supply, especially in India and Asia, where WazirX liquidity matters. Risk note: relistings and token distributions often trigger short-term selling and price discovery shocks. All right, that's the tape for today. If you like the snark and the receipts, subscribe for daily slices of chaos, alpha, and the occasional lesson learned the hard way. That's Today in Crypto, where the gains are imaginary and the pain is real.